The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Mark Raymakers here with Insurance Agency Marketing. I know you're probably expecting Sandy Vacani, but unfortunately she is under the weather today, so you got me instead. So this morning we are going to record this webinar for you. So once we are completed and finished with this, what we'll do is we'll email this over to you. It'll be in the form of a YouTube link. So all you need to do is just click on that and view it as often and whenever you like. So I do have the question box open. This is one thing I'd like to point out to you. If you do have any questions as we go ahead and type the questions in. We'll address them as we move along here. And I'm going to tell you here up front, we do a few different things here. We're going to go through some things that we provide to you as an IMO for you, some unique benefits and services, how we can help you with your business. And this is certainly what we do. We work for you. Our goal is to make you very successful, or as successful as we can, in your business, whether it be life or annuities or any of the other ancillary products we add as well. So I'm going to have a couple of polls. When I put those up, if you would just respond quickly, we'll move through those. And this is a great way for us to figure out who and how we need to contact on certain areas. So let's go ahead and get started. I know that time is of the essence. You probably have some Christmas shopping to do this afternoon. And if you're in the Midwest, you certainly aren't golfing today. It's cold here. So first thing we have is our referred producer program, and this is the way it works. Just like you, we enjoy referrals. They are a great source of contacts for us and great great relationships for us as well. And so what happens here, if you send us a referral and we contract them, just get a contract in the door, we're going to turn around and send you a check for $50. So all you need to do is provide us with a name and a phone number and a warm introduction, and we'll go ahead and give them a call, get them contracted. Now, every time they write a piece of business, what we're going to do is we're going to put money into an account, and each quarter what we'll do is we'll clear that and send you a check for their production. So for example, here we give you 20 basis points on the business that they write. So if it's annuities, if it's single premium, dollar for dollar, you're going to get that 20 basis points. It's a fraction of that for target life, so not as much premium to get a bonus there. So let's just say you send us 3 agents to write $1 million in a year. That's $6,000 in cash for you. And I will tell you, as long as they're writing business, you will continue to receive a check. You might retire and they're still producing, you're still going to get a check. Now, the nice thing is we've got agents that are clearing over $10,000 a year on referrals. So you never know. I mean, if they're a good agent and we can work out something, you're going to get some nice money to put in your pocket. And I will tell you, there's no reduction in commission for them. There's no concern that you have for chargebacks on your back, so to speak. So this is just a way of saying thank you for the referral. Now, here's something I like. When I was in the field, I had to pay for all of my expenses. And getting started was very difficult, as far as paying my bills at home and covering my expenses. But this is something unique that we do here. It's our market and reimbursement program. So let's say you write $100,000 in single premium life or $100,000 in annuities. We're going to put $200 into a market and reimbursement account for you. That money continues to sit there until you use it. And here's how you use it. We are in the month of Christmas, and a lot of our advisors will have a Christmas party. They'll submit a receipt to us for, let's say it's $1,000 for their holiday party that they have. We will turn around and send a check for $500 or 50% of the expense of the receipt that we receive. So this, if you do the math, that's only $250,000 in annuity and or single premium life. To get the $500 reimbursed. So it doesn't take a lot, and it accumulates rather quickly. I know we have agents that have thousands of dollars in their accounts and just haven't used them yet. They're waiting for the right opportunity. Now, a lot of our agents, they'll use that for their seminars. They'll use that to purchase their leads. It does not affect your commission, okay? So you're not taking a hit on that. This is just another benefit of working with IMS. Now, we do have a new producer bonus, and I do see that there's a lot of new names on here this morning, which thank you for joining us. I see some people are still coming in here. We're just kind of going through some intro slides here before we get into the meat of the webinar. But for you, once you contract, so new producer, we've got 3 different production levels. Once you redeem your bonus, you can't add and get further bonuses, so to speak. So let's just say you write $100,000 single premium life or annuities, and that's what we're talking about here this morning as a comparison. You write a $100,000 case or 2 cases or 4 cases to get $100,000. You have a choice between $750 in cash bonus or a 2-year producer website. Now, this is something you can buy into as well, and I'd like to put this out, and I'll tell you more about that here in just a minute. But our website service is something that we've got a great team can help develop a website for you and maintain it for you, and it's very reasonably priced. So something you can earn or you can buy. Or if you choose not to take either one of those two, then you get a free iPad. I know a lot of companies are going towards the e-apps, which are super nice. You can use it with an iPad and not have to worry about bringing paper with you, so to speak. You might wait till you get to the next level, which is the 300,000 level. You can choose between the Social Security program and 3,000 piece mailing. This is a great way to get in front of a lot of senior buyers. You learn a seminar system, and I'll tell you, the agents that have taken advantage of that have really enjoyed success because they're getting in front of the seniors and they're picking up some more things. Okay, let's see here. I think someone said they're not seeing the screen. Is that true? Hopefully you're okay. Are you seeing the slides? You should be if you're not. Oh, we got a little issue here. We are having an issue with our screen. I'm glad somebody mentioned that here. Okay, it says to me that I'm showing the screen. Hopefully you are seeing that. If not, I don't know what the issue would be. Okay, everybody's seeing the screen. I think maybe we just have a couple of folks that are having some trouble seeing it. So I do apologize. I'm not really sure what the reason for not being able to see those. But okay, so let's move on here. Looking at the 300,000 level. So if you don't choose the Social Security program, then there's the 2,000 market reimbursement dollars. Again, we've had agents really do some neat things. They've updated their office with that type of a bonus there. So that's one thing. Or you can take advantage of the $1,500 gift card to do whatever you please with that. Lastly, if you're in the seminar, this is a big deal. We've got 2 agents here that are top producers of ours, and they qualify for all of our trips, a lot of the company trips. First one is 5,000 piece mailing and seminar coaching with Matt Gill, and the other is a 4,000 piece mailing and seminar coaching with Dave Pimper. So if you're interested in that, this is something you can earn, or of course you can buy into it. Just call and ask for anyone in Annuity Marketing, and they can explain how that program works. Lastly, there's the Ritz-Carlton Travel Rewards package. If you want to just take a little vacation, you can get that as well. All right, back office support. I'm going to go through this real quick here. So here's something that we do. We've been doing this now for 31 years, going on 32 years. Obviously, what we want to do is help you work smarter, not harder. And so by coming to us, by bringing business to us, what we do is everything from, I'm going to kind of cut to the middle of this here, submission to commission. So we provide you all the tools that you need. We provide you the case design. Everything that you need, we provide to you via email, mail, overnight, whatever it would be. So we scrub your applications for you. If there's a case where we need to order an exam, we'll do that for you. But bottom line is we make sure that before that application goes into the home office, that it is ready to go, that everything is attached. We make it real quick and easy and simple, and communicate with you on a constant basis every week via phone call or email, I should say. Some agents like both. So we are letting you know what's happening with your case. We take it all the way through again from submission to commission. And what we've done is we create paperless contracting, and basically what happens is once you fill out the contract one time, you can add more carriers just simply by giving us a phone call or sending us an email and say add this carrier to it. Okay, I told you about the website service. This is something our creative marketing team can do for you. If you're not taking advantage of this, I certainly encourage you to do that. They do everything from helping you from the very beginning to customize pieces that you can use, any kind of flyer, any type of newsletters you want, postcards. They can do that for you. Another thing I'm really impressed with is I've seen some of the logo designs that they've created for our advisors. Just really attractive, beautiful pieces you can put on everything that you send out, every type of advertisement that you use. And then lastly, the digital solutions. This is something where they can help you, again, as I mentioned, the website. They can help you through different email marketing strategies, getting into social media. I see a lot of our advisors are starting to take advantage of Facebook. They've got some really attractive pieces out there. So the bottom line is this group that we have here in our creative marketing team really helps you just take a broad brush approach to every aspect of marketing yourself and to really create a nice look. Our website here real quick now is www.imzinc.com. This is where you can go, obviously, to get the contracting, everything that you could possibly want or need to support you and your businesses out there. This is designed to help you when we're not available. And when we're not available, it would be before hours, after hours, or on the weekends. And you can catch us here from 7:30 in the morning, generally till 5:30, sometimes 6 o'clock. I hate to post my hours out there too late, but I'm here generally till 6 p.m. every evening. So the nice thing is that we're there for you. But if you call in those hours that we're not able to support you, our website is designed to take our place. So everything you need is out there. I encourage you to check it out. The Retirement Analyzer, just real quick, this is a real holistic approach to planning for your clients. And if you're not using something right now, this is a product that we've been using for several years and really provides great results. So when you are meeting with a prospect for the first time, you fill out a lot of information. And I'll tell you, if you're computer challenged, if you're not really quite sure how to turn it off, if you're like some of our agents that just unplug the computer from the wall when they're done with it, this is probably not a program for you. So I would encourage that you call and ask for Marcus in our office. Marcus can help you with the Retirement Analyzer, but it's a great program. It takes a holistic approach and will certainly help you to generate more sales. Now, here's our first poll. So I'm going to put this out there, and I mentioned this too when we got started. If you can just make a quick note here, yes or no. And here's what we have here. We, in response to the Department of Labor, we wanted to be ahead of the game. So what we did is we created our own RIA. And the poll is really to determine if you like someone from IAMS Wealth Management to give you a call. We can help you with the testing, help you with the materials, help you financially support the cost of that. But here's a nice thing. When you go into IAMS Wealth Management, you're going to see not only our commissions at the top, but our fees are very competitive. I've yet to see anybody beat us. In fact, I've seen a lot of advisors have moved their block of business over to us because of the fee structure as well as the commissions. So it's a great opportunity. And really by offering equities to your clients, adding that extra layer to your business, not only is it going to help increase your revenue, but it's also going to improve your client retention. And it really does strengthen the relationship. The more products, the more lines of business that you and your clients have together, the less likely they are to go somewhere else, the more likely they are to come to you with a referral, the more likely they are to come to you whenever they need an additional product or they have some questions or concerns about their business or their portfolio, I should say. So if you're interested in having one of the folks from IAMS Wealth Management call you, all you need to do is mark yes. And then Mike will give you a call here. He'll probably start calling you today, if not on Monday. But this is a great way to kind of find out. I mean, they can even give you some updates of what's happening on the Department of Labor. As you know, it's been kicked down the road quite a ways, but it's still real. Okay, well, I appreciate those of you who have replied to this particular poll. If you decide that you want to know more, if you want to visit with him, just call our office here. And again, okay, well, I'm going to hold on for 1 second. I got a few more people that are voting in on this. Excellent. Okay. Yeah, we'll have one of the folks here. Probably Mike will call you to answer any question that you have and then to discuss everything else and how the process works. They even have a process in place where you can refer clients over and not necessarily have to be licensed or have a 65 to do that. So if you are interested in maybe having your client be able to put some equities together kind of sort of through you, they can help you with that as well. Okay, I'm going to close this down. We're going to move on. Okay, next thing, Life and Annuity Academy. This will be my last poll, okay? So here's what we have in store for you. This is a great way to be educated. So this is the last poll. Just mark yes or no, and I'm going to explain how this works. So by marking yes, all you're doing is you're telling me, I would like to know more information. I would like somebody to send me out an agenda of what is covered in the Academy. And I also like to know what the dates are. We've got our first one scheduled in March of 2018. To me, I think this is a great opportunity to pick up some new sales ideas and get them quick and get going because it's early in 2018. So what we do is we, Insurance Agency Marketing Services, pays for your airfare. We pay for your lodging. We pay for your meals. So if you do the math, there's no expense to you other than the time out of the office. But the most successful people that I've spoke with said that the best investment you can really make is in yourself, right? So here's an opportunity for you to invest in yourself by picking up training. We fly you out on a Wednesday. We do a few short presentations Wednesday evening. We feed you that evening. Then off to bed. Thursday, it's a full day training. Friday, we do a half a day training, and we get you on a plane by 1 o'clock in the afternoon and get you home. So you're back home. You got the chance, obviously, to go in your office over the weekend, get caught up. and then on Monday hit the road running with some new sales ideas. Now, I'll tell you, we bring speakers in from across the country, some of our top advisors, the most successful advisors that we have, and what they're going to do is they're going to provide you some great ideas, some marketing. The whole idea is that what we want to do is we want to help you to grow your annuity business and your life business. And a lot of times, obviously, what we're trying to do is we're trying to help you incorporate more ideas, more product maybe into what you're offering to your clients. Now, this is not a product training. This is a sales concept and marketing event, basically. So I'm only reaching half of you out there, so I don't know if you're all getting this or not. If you're not getting free training, if you're not learning what's going on out there, obviously there's a lot of new things that are happening, whether it's through product, whether it's through the industry, we cover these things. But I can tell you right now that when we have these events, that I have yet to have an agent say it was not worth their time. And I've been here going on 9 years, so this is definitely a great opportunity for you to get free training. And most of the time, I know when I was in the field, I had to pay for the different seminars that I went to. And it would depend on how long the seminar was going to be. So this is free. There's no expense to you. And again, just by marking yes, what I'm going to do is I'm going to contact you and I'm going to let you know via email the agenda and the dates. Again, our first one is scheduled for March. Okay. Much better response. All right. If you decide that you want to know more, all you have to do is just call our office here and we can get you the information and we'll get your name for an interested party to attend this upcoming event that we have in March. Okay, I'm going to close this. I'm going to move on. We're just about ready for the heart of the webinar here. That's why we're all here. We've always had an advisor production trip. And so this is a great way for you to be rewarded for your efforts. Our trip here, the qualification ends this month. We're going to the Boulders Resort and Spa, February 25th, 28th here. Just a couple of months, and that ends here as far as the qualification ends this month. But we do an 18-month qualification, generally speaking. This is for producer and guest. And so if you like to travel, that's great because we will reward you for your production, and we will take you and your guest out to these great trips that we have. And this is, again, the 2018 Marketing Summit. All right, so let's go ahead. Let's go into the meat of the webinar here today. So let me tell you how this really all came about, just real short and sweet. So when I started here, I found that there was a lot of annuities that were being written, and a lot of these annuities were being written just because it was a quick sale. What we did is 31 years ago, we started selling annuities, added life to the portfolio later, and started to see through a lot of these suitability forms that there were dollars put into annuities that were just designed to pass on to the next generation, to beneficiaries. And so we started selling or offering single premium life before it became a real hot product like it is today. So, and continually do millions and millions of premium in this every single year. And when you look at the statistics, they're tremendous. They're just basically telling us that there's a lot of clients out there that are just ripe for single premium life. In fact, I keep hearing the statistic around 90% of annuities out there are passed on to beneficiaries. They're never actually liquidated. They don't take advantage of 10% free withdrawals. Income riders are never exercised, etc. So this is what we want to do this morning is I want you to stop and think, if you're selling annuities today, and I hear this as an excuse a lot of times that, you know what, I don't want to sell life insurance. It's so difficult. There's all of these different underwriting issues and et cetera, et cetera. So my goal here this morning is to show you how simple and how similar selling single premium life is compared to annuities. So and I just kind of let the cat out of the bag. I think I already mentioned this somewhat already, but stop and think about this. If your client comes to you, they have an asset they don't plan to live on. Realistically, is annuity the best place to leave this asset or place money into, or is it the easiest and most convenient sale for the agent to make a commission? And stop and think about that. I have had a lot of agents tell me, yeah, it's easy, it's quick, it's easy, there's no underwriting, I make a great commission. But once they learn and they understand single premium life, I have had countless number of advisors say, I wish I would have known about this a long time ago. So with that said, let's move on. Here's what we're going to cover this morning, just real quick. We're going to go through each one of these points, and they're going to be pretty short and sweet, this is obviously what I like. I like the webinars to be short, sweet, to the point, and something that can you can take advantage of as soon as you get off the call here. So we're going to talk about suitability, turnaround time, return of premium, guaranteed interest rates, physical exams. We're going to talk about the underwriting part, the part that most advisors don't like to discuss. Talk about free withdrawals, loans, accelerated benefits, chargebacks. The issue age is tax deferral, tax-free transfers, and of course, what everybody's interested in is commissions. Of course, if it's best for the client, we want to make sure that we get paid for it, right? So let's look at suitability. Now, this is something we got to be kind of careful with. Suitability product training. Generally speaking, when you look at single premium life, there's no suitability because it's a life insurance policy. Now, some of the carriers will stop and they'll look at it and say, no, wait a second. Did they just put this money into an annuity? Is it suitable for that client to go ahead and take a big hit on a surrender from an existing annuity? So generally speaking, there's not a suitability test like you would see with annuities, okay? Because every annuity, there's got to be suitability training. Now, I will say, on select products with single premium life, there is. And those select products are generally going to be those that are tied to a single premium immediate annuity. And we do have products that we use that for. And that would be when we're taking qualified dollars and putting it into a single premium life. In fact, I worked on a case this morning for a guy who's got $500,000. His dad's 77 years old, doesn't need the money. It's in a qualified account. And he says, I do not want to pay taxes on $500,000 when my father dies. So how can we do that? So we're going to put it into a combo product with a SPL, and the SPL will fund that life insurance policy. So that's a great product. All right, let's move on here. Turnaround time. So here's just the other thing I hear a lot of times. Oh, gosh, it takes months for a life insurance policy to get issued. That is not true. 1 week is generally the case. Some of these policies, they get approved while on the spot. You do a paper app, you do a phone interview, they'll tell you right then and there if it's approved. All you do is send in the application, they get the app, the company creates a contract, a policy, and they send it back to you. So it's about the same time as annuity. In fact, there's a lot of annuities out there that are taking longer life policies. And I'll tell you one thing, we're seeing that it's about the same. So realistically speaking, you can't say, well, it just takes too long to get a life insurance policy, because that is not the truth. We got the immediate approval, as I mentioned. Okay, so let's move on to return of premium. Well, this is a big deal today. My first policy I sold was a single premium life policy back in 1989, and I remember that there was not a whole lot of liquidity to it. It was just an asset we're going to pass on tax-free to beneficiaries, right? So the nice thing today is when you look at a single premium life policy, your clients have the return of premium feature. So once they put that money in there, 6 months later, they can say, hey, you know what? I want my money back. And they can get all their money back. 5 years later, they can say, hey, I want my money back. They get their money back plus the growth on the contract, which of course that little bit of growth, or a lot of growth, whatever the product it is that it's in, would be taxable, right? So the nice thing is that your clients can't say, well, I put it in life insurance policy and I never have access to it, so I don't know if I really want to do that. I had that objection when I was in the field. That's not the case. They can have full control of the money, whether it be through return of premium or loans or whatever. So kind of the same as annuity. You're expecting or you're used to return of premium in some products. They both have it. How about a premium bonus? Yes, single premium life insurance does have a premium bonus. We've got a couple of products out there right now that do. One has a 12%, one has a 10%, just like annuities. So if your clients are used to buying annuities with a premium bonus, this is kind of nice because they get that premium bonus built into the contract. As I mentioned, up to 12%, up to 12% on annuities as well. All right, so let's look at guaranteed interest rates. So if you look at today, clients have money sitting in the bank, and oh gosh, they like to see it. They don't really get to touch it, but they're all get a warm, fuzzy feeling because they've got money out there in the bank, and it's super easy to get to. It's liquid. We already talked about the liquidity through return to premium feature, right? But let's look at the guaranteed interest rates. There are guaranteed interest rates on both products, but here's a nice thing. On the single premium life, we get up to 3% guaranteed on some of our products out there right now. There's not a bank product out there that's going to guarantee 3%, right? So look at the fact that you've got clients that are sitting out there with money that they can touch, they can get at any time that they want, maybe, unless it's in a CD, getting less interest, paying taxes on it every year. That's not the case here with the single premium life. So you're going to get a guaranteed rate of about 1% at best on an annuity. So the single premium life's got the lead there. Let's look at a physical exam. Here's the other thing. You know what? I don't want to put my client through an exam. I hate that process. It takes a week for them to get scheduled, and well, there's no physical exam with single premium life. So we're going to get rid of that objection. Okay, same as annuities. There's no exam. We're just doing a paper application and a phone interview. That's it. You're done. Now, there may be an attending physician statement that's ordered, but that doesn't mean that your client's going to have someone come banging on their door, come and draw blood and have them urinate in a cup and, you know, put them on a scale and all that stuff. It's super quick, simple, and easy. Free withdrawal. Here's another thing that's attractive. So your clients are used to having a 10% free withdrawal on their annuities, right? Single premium life also has a free withdrawal. In fact, up to 10%. We do have products at 5, but those other ones have 10%. So it's liquid, as I mentioned before. How much more liquid can you get? You got a return of premium feature, you got a 10% free withdrawal, and you have loans up to 10%, just like annuity on a free withdrawal. Okay, and a quick question here. I'm going to hold off for just a minute on that question, Randall, if that's okay. Okay, so loans. Here's the other thing. On the single premium life, both do have a loan feature to them. Up to 4% is probably on the high side, is going to be the net cost to the client as far as a loan. Some of the annuity products out there have a loan as well, a little bit higher, up to 5%. So yes, again, more liquidity features. And remember, if you take a loan against a life insurance policy and the client dies, it just reduces a death benefit in proportion to the loan value. Accelerated benefits. This, I'll tell you right now, is probably one of the biggest reasons, not one of them, not the only reason, but it's one of the biggest reasons to have your clients purchase a single premium life policy. I always keep an eye on the statistics, what's happening on long-term care out there today. And obviously, I think we all know that one of the main reasons that seniors file for bankruptcy is because of a health issue. So what happens? They're drawing money out of their retirement accounts to pay for their long-term care stays, their health concerns, things like that. So the single premium life will provide benefits for long-term care, for home health care, and for terminal illness. And those come as a tax-free benefit. So if you have a client with $100,000 sitting in a bank account or sitting in an annuity somewhere, they put in a single premium life, there's times we more than double what that is. So that 100,000 is now worth 200,000. Sometimes it's 50% more, so now it's 150,000, depending on the age of the client. But now that is a tax-free asset for them. And so that will pay for their long-term care, their home health care. There are annuity products out there that have it as well. Yes, true. But keep in mind, a lot of times those are going to be taxable, right? Because you're getting growth off of the annuity account that's also going to help fund that long-term care. So chargebacks, of course, there's chargebacks for single premium life. They are structured a lot like annuities. You'll see that generally they're going to have a 2-year chargeback like the annuities do. So if your client decides to bail out on some of those return of premium features, or just they're going to flat cancel or surrender, I shouldn't say cancel, but if they're going to surrender, if they do it in the first 2 years, you're going to see a chargeback. Now, I will tell you what I see, very, very little of this. And the reason for that is because these are dollars your clients really are not going to live on. So they're going to pass them on anyhow. So the plan is, why touch them? There's no need to. Let's put in a single premium life. Let's get those accelerated benefits. Let's get all the benefits and features that our current annuity does not have, and pass it on tax-free. So the chargebacks, again, they're up to 2 years. Issue ages. This is pretty neat. We have beefed up our single premium life portfolio. I would say, from what I've seen, we've got the best out there. We have a product now that'll issue up to age 95. We have products that'll issue on newborns. In fact, it's not uncommon for us to put $2,000 or $3,000 into a little single premium life and get a grandchild, $25,000 or $30,000 or $50,000 policy, depending on how much premium we put in there. And with the annuities, we can issue 0 to 90. So you got a little bit more of an edge on the single premium side. Tax deferred, of course, once you put something in life insurance, put money in life insurance, you'll never pay taxes on that money unless you borrow from it, unless you take like take a loan out of a policy that is a MEC, which single premium life policies generally are a MEC unless we are rolling money from an existing non-MEC life insurance policy. So that's going to grow tax deferred just like an annuity. But, obviously, you're really not going to see any taxation on that asset. Tax-free at death, yes, single premium life is a yes, so we got an edge there. No, we got to pay taxes on the growth in the annuity, right? Commissions, up to 15% commission on single premium life, up to 10% on annuities. The average single premium life policy is probably going to be, as far as commission, you're talking around 9 or 10% comp. And I know you're not getting that quite that high on the annuities out there. So kind of takes me back to the first question I asked you. If your client's got money, a lot of times they're inheriting money, or they got money they're taken from a checking or savings or CD, whatever. They really don't need it. They're just going to put it into something. Are we putting it into the annuity because it's an easier sale and all the things that we've already talked about? So kind of what I'm trying to do is I'm trying to tip the scales a little bit to show you that single premium life really does make sense. Don't always just think that the annuity is going to be the best route. We love annuities, of course. That's how we got started, offering that 31 years ago. Okay, I have a question here. Let's see. Randall says, if a prospect has been declined for a fully underwritten single premium index life within the last year. Is there any possibility of qualifying? That is a great question, Randall. So one thing I would tell you about single premium life, it's not guarantee issue. So even though there's no exam, they're still going to have health questions. We're still going to order an APS if we need to. So I would like to talk with you about that, because some of the carriers that we have are going to be a little bit more aggressive than others, going up to Table 8. Generally speaking, single premium life plans are Table 4 as a standard issue. And I'm really glad that you asked me that question about underwriting, because there's something that I didn't really hit on enough, is the underwriting part of it. Again, they're generally Table 4. We've got a couple carriers that go up to Table 8 now, which is a good thing. So you might have a client had cancer, heart attack, stroke 2 years ago. We're getting them covered. Now, here's the other thing. A lot of you out there probably are familiar with the Lincoln MoneyGuard product. We have that in our portfolio. Genworth had a product as well that's no longer available. But they underwrite based on mortality and morbidity, those unique products like that. Whereas probably 95% of the single premium products that we offer only underwrite mortality. So let's say, for example, your client has arthritis real bad and they use a walker, but otherwise everything in their health is fine. They just have really bad arthritic knees. They're not going to get approved with like a MoneyGuard product. So they would get approved with a traditional single premium life plan, because they're not looking at that knee issue. It's more about, are they insurable for life insurance? And so if you have any cases that maybe were declined through MoneyGuard, give us a shot at those, because we are actually placing a bunch of those cases. So keep that in mind. But yeah, thank you for that question. Let's talk after, and let's find out what the health conditions are. I will tell you that there are some companies out there that are traditional life. They're very tight on their underwriting, and that's one of the reasons why they are so competitive in in that particular product line that they're offering. So Paul asked if you can get a copy of these slides. You know what I'm going to do is I'm going to email you the recording. And let's see, can you do a 1035 exchange? Yes, you can, Terrence. So if you have money in a traditional life insurance policy, in fact, this is a great sales point right here. When I wrote that single premium life policy I was telling you about when I first got started, this was an old marriage or wedding policy that this lady had. She was in her early 70s, and she'd been paying on this policy for quite a while. It was paid up, and I think it was like a $10,000 policy, and she had about $8,000 in cash in there. And so now stop and do the math. Think about this. Who's at risk now? $8,000 of that cash in there is hers from accumulation over 40 plus years, right? There's only $2,000 net amount of risk to the company. So why do we buy life insurance? Because we want to transfer the risk to the company, right? So here's what we did. We took that $8,000, we rolled that into a single premium life policy, and if I'm not mistaken, I gave her like $15,000 or $17,000 more. So now we put more of the risk on the insurance company, increased her coverage, guaranteed. And so you can. That's where, look at those old policies. I always say, one of the things I learned when I got started was ask every person you talk to, every prospect, when was the last time you reviewed your life insurance policy? Let's take a look at them and let's see. There's been a lot of changes. And I used to have those mortality tables. I could tell you every year those were changed. I could tell you the interest rates that were credited on those. So I could tell somebody, I had a policy I got 40 years ago. I could say your policy is probably based on the 1958 mortality table or the 1917 mortality table, and you're probably only getting 1.5% interest rate guaranteed. So sure enough, they pulled out the policy, and there it was. And then what would happen was obviously, knowing that and explaining to them how the mortality works now, people are living longer, cost per thousand is lower, all the benefits and riders. So it's pretty easy to show them how taking an old policy that maybe is paid up can get them more coverage today. Believe me, there's a lot of opportunity out there. And so those 1035s, obviously I don't say replace to replace, but I would say replace if it's a good thing for the client. Okay, another question. Will single premium life trigger a max status on the policy based on the amount put into the contract? So good question. And here's what happens. If it's coming from another policy that is not a modified endowment contract, then it will not trigger a MEC, okay? But if the other policy that it was sitting in is a MEC, it will. Let's say you've got a client who's got money coming from anything other than a life insurance policy. And again, we see it coming from a lot of different places. when you put money into a single premium policy, it will create a MEC right away, okay? Because you've violated the MEC guidelines, and we're guaranteeing the death benefit. That's something I didn't stress here. When you're putting money, if your client's taking money out of any type of an asset or any type of an account, puts in a single premium life, the death benefit's guaranteed. Some of these products they endow. They're just, let's say you buy a $50,000 death benefit, they're going to endow at $50,000. Some of these other plans, they're going to continue to grow because they're maybe an index life or universal life on a whole life chassis. So keep that in mind. All right, another question. How about an old 401k worth $12,000 and she's retired? Okay, so here's what we'd have to do here, Garner. We would have to surrender that account. Just like any of the annuities out there, you have to surrender it, pay the taxes on it, and put in a single premium life. Or what you can do is with these qualified funds, we've got combo products. So imagine this, if you will. It's like a chain link, two links. They're put together. You can't get them separated. They have to stay together. So we've got carriers out there that have products that are designed for qualified funds or non-qualified funds with tremendous growth over their cost basis, which means they're highly taxable. So let's say you've got a client and your situation's got $12,000. That may not quite be enough to put in this product because it's not going to generate a high enough payout. So a lot of times what we do is we just surrender it, pay the taxes, and then dump it in a single premium life. But to go back to what I was saying is, let's say on the left hand here, you've got your qualified account. You roll it into this. It's actually a single premium immediate annuity, which is part of this combo product. Once you roll it in there, it still maintains its tax qualified status, okay? But we generate a SPIA payout right away. Now that's taxable because we've taken a qualified distribution, right? So what happens is your client, they do not receive the check. They don't see it. The check then, or that fund, is automatically deposited into the right bucket, which is the life insurance contract, okay? So the client gets a 1099 for that distribution, and the life insurance policy has received its first premium payment, okay? Now next year what happens, same thing. The same SPIA payouts generated goes directly in the life insurance policy. Client gets a 1099. Let's say the client dies that year. The beneficiary, as marked on the application, would receive the SPIA, the balance of the SPIA, so there'd be 8 distributions that weren't made, would be taxable. Then you'd have the life insurance policy, which would still be paid in full, tax-free. So your client's getting both of those. So to finish the story, these SPIAs can be set up. The products can be set up on a 3, 5, 7, or 10-year basis. So imagine 3-year SPIA, 5-year, 7, and so on. That means that SPIA is going to fund that life insurance policy over that number of years. And then eventually that SPIA is completely liquidated, the tax has been paid, and the beneficiary would inherit that death benefit. And if there is a chronic illness, the client can accelerate the death benefit for chronic illness. Okay. So Garner, let's talk about that one maybe after the webinar here this morning. So here's a couple things that I want to draw for you here. Who is a prospect? And this is where I think it's really kind of a fun, exciting thing. If you look at what's happening right now, things are getting slow for you out there, I'm sure. People are starting to, they're baking, they're shopping, they're planning for Christmas, they got family coming in, and they just really don't want to meet right now. This is the time for you to plan for 2018, and we really want to partner with you on this. So what I would do if I were you, and I remember this as an agent, I love Christmas, but I didn't like the fact that I couldn't get in front of people. So what I really needed to do was to figure out what I was going to do next year. So I would sit down and I would figure, if you've got a CRM system, something that can help you sort out your clientele, I would look for clients that have existing assets that you've noticed they're not drawing an income from. Maybe they're retired, or maybe they're going to be retiring in 2018, and you can see from their portfolio they're not going to touch a lot of those assets. This is the time to go see them. Look at those clients that have annuities beyond their surrender period. Now, I'll tell you a lot of times, and I've got one that we're working on here this morning. The agent's going to go out and see them today. They've got $237,000 in an account, and it's qualified. And so what we're going to do is we're going to move it over. She's going to end up with over $400,000 death benefit by moving that over. And so there's, she doesn't need the money. She's 67 years old. She's got plenty of assets. So there is a small surrender charge on it. But the nice thing is that the death benefit is going to by far exceed what she would have, even if she just held that annuity to maturity. Look at those clients that are turning age 70 in 2018. Again, look at your CRM. Why do we want to do that? Well, because they're going to have to start taking RMDs. And one thing I didn't mention about that hybrid product, that combo with that SPL and the life plan, that satisfies the RMD. Because remember, when you look at an RMD, it's the person's life expectancy is how that RMD is based, right? So you're actually taking that qualified account, and instead of taking over lifetime, you're taking over a shorter period of time, which can also help offset the RMDs on another qualified account that they may draw upon, okay? So keep that in mind. It does satisfy that. Those folks that are celebrating retirement, what a great time to sit down and visit with them and talk about what assets we're going to turn on and what they need and they don't need. Again, I mentioned client, well, sort of somewhat. If you have a client that's taken RMDs, I got another case I'm working on here this week, same situation. They've already been taking RMDs. They've taken 4 or 5 distributions already. They're just putting in the bank. So what we do is go back to that SPL Life Combo product. We can still roll that into this plan. And if there's some RMDs out there right now, they can put into a different single premium policy, whatever the situation be. But look at those clients that are taking the RMDs this year. Again, those turning 70. Or, of course, those that are just taking and put it in the bank. Received inheritance. I see this a lot where you've got a husband and a wife. Unfortunately, he's passed away. Now she's got some life insurance. Maybe there's some other funds out there that she's named the beneficiary for. She really doesn't need the income. But now who's going to take care of her if she goes into a facility? And this is a great way for you to provide some additional long-term care or home health care benefits that maybe she already has some, but that's okay because this is a fallback plan. It's also a plan that can be passed on to the children or the grandchildren. Look at those clients that have CDs. I know that you're out there right now. You're talking to those folks, telling them, hey, there's a better way. There's a better place for you to put your money. You're probably putting it into annuities. But one thing to think about is if this is rainy day money, they really don't need it for any form of an income. Gosh, I can't tell you how many cases I worked on this week where agents had clients that had money sitting in the bank and they just don't need it. So why leave it sit in a CD so that that bank can just get taller, bigger, and more shiny and pay them just a pittance of interest, and at the end of the year have to pay taxes on that little bit of growth. I mean, realistically, that money is as lazy and as worthless as it can get sitting there because it's not doing anything for them. So look at that, obviously. I already talked about RMDs, 10% free withdrawals. We do quite a few of these too. You got a client, maybe they've got $500,000 sitting out there, and sure, they're going to need income from it one day. Take a 10% free withdrawal and set them up with a nice death benefit. That $50,000 premium could buy them a $100,000 death benefit, which is $100,000 in long-term care benefits over a 36-month period. So be creative, look at that. And then again, as I mentioned, there's cash value policies with current premiums or maybe they're done paying premiums on it. Here's another thing we do see a lot of. There's a lot of universal life policies out there. I know when I got started, the interest rate was 9.75%. That's pretty high. There's not a UL policy in the market today that is crediting 9.75%. So again, goes back to that question. Ask the client, when was the last time you reviewed your life insurance policy? If you see that policy is a universal life plan and the agent hasn't been out there, there is a very good chance that policy is not going to make it, that it may lapse before your clients pass away. So we save those by 1035 exchanging those into a single premium life policy. And again, kind of look for those clients that have an overabundance of annuities. Okay, so here's a couple things to think about. If you were to go through, and I kind of write down a bunch of different points I think that are pretty attractive as far as some things you might want to ask your client about. If you're sitting in front of your prospect, if I can show you a plan that provides you, and you can use one of these or all of these, return of premiums, you got full liquidity, up to 12% bonus. There's free withdrawals up to 10%. Index link returns averaging, let's say about 6.0, 6.5%, depending on what index options you choose, with a 2% rate of guarantee. There's indefinite tax for long-term care and home health care benefits. And any of the assets that you don't use for long-term care get passed on to beneficiaries. Would that be something you'd have some interest in? And you'd be surprised how many clients are going to say yes. So that's really what that's about. Single premium life is a very encompassing product. It is so much different now than it was. I know back when I got started in 1988, I sold my first policy in 1989. And so it's a lot different now than it was back then. So, okay, so So Paul asks, how old do policies need to be reviewed? You know, it's interesting you say that because I'm 51 years old, and almost 5 years ago, my wife surprised me to tell me that we've got a little baby on the way. Now, I never in a million years expected that I would be having a child then. I'll be 65 when my son's graduating from high school. So how often should you review policies? I would say at least every 5 years. I made it a practice to go out and see my clients every year. And, it worked very well for me. I used to write a lot of business off of existing clients. And not just that, but referrals. A lot of times you just do a review and you get a referral from them. And you got to get paid one way or another. And that's the other way I got paid, was getting a referral. So, if you've got clients out there, if you have any senior clients out there, I would be willing to bet you that they probably have a little policy. I mean, MetLife's been around forever, or New York Life, or Prudential. I replaced a Prudential policy once for a lady. I believe she was 80 years old. It was a one-page, like front and back was the life insurance policy. And in there it had that the rates that she was being charged were based on the American Standard Ordinary Mortality rates. Do you know what that means? That was the mortality table based on the life expectancy of the people during the time of the Civil War. That's how old that policy was. So even though it looked like, well, gosh, there's nothing here, she rolled it into single premium life policy and got a substantially higher death benefit. So ask that question. I'm telling you what, you might walk into a house and in all actuality, you don't find anything there. They've got no money to put into annuity. There just really isn't anything out there, but they've got an old life insurance policy that they might be paying $10 a month for. Maybe it's an old debit policy, or maybe it's a policy that's paid up. One of the things to help them to realize is that things change. So if you look at the life expectancy of people during the Civil War, how long were they living back then? They had so many different diseases, the life expectancy was very short. If you lived to be 60 years old, you were amazing. Look at people today. We got people living 100 years old. Why do you think insurance companies have now bumped their mortality out to age 121? Because people are challenging that. There's people that are 108, 105, 110 years old, so they've got to stay ahead of the curve, right? So that's what's happening. So to answer your question, I know that I'm really belaboring this point, but I'm a big fan of saying, give me your policies, let's look at them. Every single policy that they have that's sitting there, if they're paying premiums, has a policy fee. And so I remember one time I had a client brought in a big boot box full of policies that were all in the sleeves, and he had like 10 whole life insurance policies on himself. And the policy fees that he was paying a year was like $600 a year for policy fees. And I said, we can combine these all together. You can pay the same premium and get a higher death benefit, or we can roll these all into one, have a guaranteed paid up policy, the same amount of coverage you have now, and never pay a premium for the rest of your life. You know what he chose? He chose door number 2. I don't want to pay any more premiums. I want this coverage. We combined it all together, and he had a decent amount of cash value in there, but we were able to take what he had paid, which wasn't over a real long period of time, and get him the same amount of coverage and no more premiums. So there's options out there. So whatever you do, just ask them, when was the last time you reviewed your life insurance policy? Pull them out. And I tell you something, if you get those policies paid or pulled out and you don't know what to do with them, give me a call, because I can help you with it. There's a lot of opportunity out there for you to help those clients. And realistically speaking, if you look at what a funeral costs today, I've just seen that the average cost of a funeral is like $14,000. So those policies that they bought 40, 50 years ago that are worth $5,000 or $10,000, really not going to cut it. So this is an opportunity for you to help more. People are living longer. There are higher crediting rates on the policies. The mortality rates are lower. And there's benefits on these policies now that didn't exist 40 years ago or 50 years ago. So keep that in mind. I'd love to help you with that. I've helped a lot of people. And like I said before, I don't encourage you to replace a policy just because you feel like you got to, replace it. I don't think that that's the right thing to do. We need to look at these policies and really see what makes sense, what's good for the client. And I know that's what we want to do. There's a thrill and there's a joy in helping folks out. And I think that's another way to do it. So Okay. Any other questions? I'd be happy to address those. And you know something? You can call me again anytime. And Paul, my name is Mark Raymakers, and I noticed that there was some of you folks that came on here late. Again, I'm Mark Raymakers. I'm the Vice President of our Life Marketing Department here. And I'd be happy to address any questions that you have. Just call me anytime. And as I mentioned, you can catch me generally from 7:30 to 6 p.m. Central Standard Time, Monday through Thursday. On Friday, I usually get out of here by 5:30 or 5 o'clock, just depending on if my wife expects me to take her out for date night or not. So anyhow, hey, I appreciate y'all joining us here this morning. I will be emailing you over this recording. I'll also email over a contract for you. So if you want to maybe look at some of the carriers we got available, we can certainly get you set up with one or as many carriers as you want at one fell swoop. And we do all your illustrations for you as well. So if you come to us with a case, we're going to ask the questions that we need to know to direct it to the right carrier and the right product. So thank you so much for joining us. I look forward to having you at another webinar here in the very near future. Have yourself a great weekend. We will talk with you soon. Thanks.